Yeah, Chris, you run a firm that specializes in electronic trading of bonds. Is this massive increase in trading in bonds and bond ETFs, is that accelerated bond trading, electronic bond trading?
Well, it's interesting, Rick McVey, our founder, had this idea 20 years ago that bonds would trade electronically. And here today, we're seeing the result of all that work. And with the rise of the fixed income ETF, we're seeing higher levels of electronic trading in bonds, both corporate bonds and treasury bonds.
And why is that? Is it just what makes electronic trading accelerate during this kind of volatility? Well, is it just easier? It's a better way to trade than over the counter. What's
if you look at how ETFs, fixed income ETFs trade, they trade fully electronically on all the markets across the equity market. Market makers that support those ETFs provide price every day. They want to trade and hedge in the underlying corporate bond market rapidly as well.
So there's hedging involved as well.
A lot of hedging. So we see the benefits of the growth of fixed income ETFs. We see that electronic trading is in fact accelerating as more and more people adopt fixed income
overall
ETFs.
Bond trading is about a third electronic now, is that right?
It's about a third of the overall market is electronic.
Isn't it remarkable, and I'm addressing this to everybody, including Tom, remember the haters 10 years ago or so would say, oh, this stuff, wait till it starts getting volatile out there. Wait till you see what happens to bank loan ETFs, where the underlying don't trade that often. The minute you hit any volatility, the whole thing is going to blow up on us. And what's happened was the opposite. I call it really a miracle, because the ETF tail is wagging the dog. It turns out people traded the ETFs instantaneously. The bonds were trading slower, and it was the ETFs that set the prices for the bonds, not the other way around. This really is a miracle to me.
Well, if you look back at March 2020, that's when the fixed income ETF was truly tested. That market, we saw super high volatility in both the equity market and the underlying corporate bond market. And all of those fixed income ETFs sustained all of that volatility.
Yeah. Tom, riff on this for a minute. We have discussed this numerous times over the years, you and I, but it really is quite remarkable and somewhat counterintuitive when it is the ETF that really sets the underlying prices. Although when you think about it, ETFs trade instantaneously. The bond prices have to have some kind of delay behind them, I'm quite sure. And I don't know if that is the reason that you actually get this. The ETFs are able to lead the underlying bonds.
Exactly. If you think about how ETFs trade in the fully electronic equity market, that's real time. Prices are disseminated real time. Bonds take a little bit longer to update price. And so the underlying corporate bond market is actually following that ETF market.
Tom, you want to riff on this for a minute and give your thoughts?
Yeah, I think, what you're pointing out, Bob, is early on, we weren't really sure. And Chris, to your point, the fact that today ETFs have actually helped with fixed income liquidity, they've helped with price discovery, and there's an embrace among the fixed income marketplace of ETFs. And Bob, as far as what you're saying, look, this market has been tested and it's come out pretty well. It's got really, really high marks. So as ETF investors continue to evolve, and now we start to see more money going into fixed income ETFs, I think investors and advisors and institutions are doing that with confidence.